going on, everybody? Hope everybody's having a good weekend and a good trading week. Hope everybody had a good week. Sharing my screen in a second, and we'll go ahead and get to it. Let's see. All right, so hopefully everybody's had a good trading week. I'll drop this link in the chat when people we can revisit this later. Let me go ahead and get my screen turned on. Sorry, y'all seeing the back end of the process here. So let's go ahead and talk about it again. Let's break down the charts. Let's go ahead and get into it. Hopefully you guys know how this works by now. I've been doing this for a long ass time. So again, my name is Briggs Trades. This is your first time watching. Again, I come on here every week and break down the charts and they just give a better understanding of what I'm seeing and what we're going into. And then talk about some of the winning trades, losing trades that I had last week. And so let's get into it. So first things first, when we talk about the markets as a whole, one of the things that I love to start with is dollar index, really understanding. Actually, before that, I want to start and understand what's going on with the overall market. So I'm gonna actually go to Forex Factory really quickly. Let's go to Forex Factory. And so Forex Factory again basically lets us know what the upcoming news is going to be for the week. So we know it's a new month coming up. And if we scroll through the month, we can see that Monday there's a 9 a.m. news red folder. We see going into Tuesday, nothing crazy. Wednesday, Thursday, and then Friday's non-farm. So this is actually going to be one of those weeks where we are going to try and look to trade early and be done by Wednesday at noon and kind of stick to that. So that's a good thing to know. So coming into the week, as we go back to the charts, let's look at dollar index. There's a couple things that happened this past week that I want to make everybody aware of. Again, starting with dollar index. The reason we start with dollar index is because we get a better understanding of the bigger time frame, like the bigger views, then we can start to go to the other charts, the other correlated assets or opposite assets and start to form a thesis for what we think is going to happen this week. So if we look at the overarching bigger picture, again, new month. So I always want to start with the monthly time frame and really just get a better understanding of what we're looking at here. So we can see here over the past few months, right, there's been a couple of things that have happened, right? So we've really consolidated going into 2023, 2024. We really consolidated with these higher time frame dollar charts. We can see here that, the market basically traded into this old monthly fair value gap that was sitting here, consolidated, manipulated up into this area of liquidity, and then just broke down, right? Inverted a bunch of fair value gaps, broke structure here. And now we're kind of in the second rally of this, right? And so ideally, I want to see the market get down to 89. That's my long-term projection on where I think we could go with this, especially with this very strong break of structure, and so asking myself, where's the sell side liquidity at? Well, I think it's here. And so long-term, I'm here. This is a long-term view. This might be another year. This could be 2 years, 3 years, whatever. But I think we're going to get down there because of that. So as I'm looking, one of the things that I'm noticing is this monthly fair value gap that we see sitting here, right? And we see that the market did not trade up into that. Um, does that mean it won't? Does that mean next month we could see a rally and it rise up into that and then go lower? Again, we're playing a very long-term game here. So like, just because you see the momentum go down doesn't mean next month we can't come back up and sweep. One thing that I'm noticing right off the bat, if we look at this, is how the market failed to take that level out, and we have that level of low resistance liquidity that the market could rally and come back up and get. I do think long term we are going down. It's just, are we going to go down off of this current price momentum? And maybe not. Um, but ideally, best case scenario, we at least trade into this gap and we run lower, right? So that's what I'm looking at. The bigger time frames. Does that really help us for today and tomorrow? Not really. In the weekly time frame, you can see us already breaking structure here, and we didn't even take that level of buy side. I thought we were going to get up there. And so one of the things I like to do with wicks is measure consequent encroachment of a wick. There's so many things to pay attention to when you're trading. And, this is one of those things. So we see that the market really failed to get above that consequent encroachment of that wick. So we might not even get that high. And this could be the start of that run bearish that I've been talking about pretty much all year. And with that being said, if we think that that's going to go lower than euro and the other charts are probably going to run higher. So if we jump to euro really quickly, again, same idea here. Euro and dollar run opposite of each other. So usually what happens is you see an inverse picture. Right? If I put these side by side, it's pretty much the opposite. So we see here that this market has really been, pretty much giving us lower lows in this range. The question that I have here is, are we going to get back up to this high? Because now euro is starting to invert. I'm sorry, dollar is starting to invert and go lower. So what do we have here? I mean, this is a very clean bearish chart. We've pretty much been at 1.21 and we fell over 700 points in the last really since, January, this entire year, we've pretty much been on a run down, swept this area of liquidity. And this is kind of what I've been saying here, is that like this might have been our overall draw on liquidity. And so it really just depends on how we treat these next few levels. Each time the market is on a downtrend and it takes a layer of sell side liquidity, I tried to take a step back and ask myself, is this the overall target that the market was reaching for, our overall draw on liquidity? And so if that's the case, then the market could potentially continue to rise. And we see here that we did sweep this level and we did break structure, and we see the month and really the last few days ended with a very bullish run. So wouldn't be surprised if we actually continue to run higher and invert this and maybe take out the high here at 1.6. It's about 80 points out. So again, I'm not really trading as much as currencies right now because the market is it's just not moving as quickly as fast as I'd like it to see, especially for the account size that I have right now. So same thing with euro, with British pound. I mean, this is like very choppy markets. I mean, it's hard to really get an overall trend here. So I'm really relying more on euro and the dollar to see what's going on. So I'm not really too worried about that. Japanese yen has been really having a crazy run lower recently, and I have really not been looking at currencies last couple months. Really been more focused on NASDAQ because the volatility has just been there right now. And really, honestly, indices, nothing beats indices when they're moving. So same idea here. We took out this low here, and then we're in the middle of a pullback. If I look at this overall market, it's still just very choppy though. I mean, like, it's running lower for sure, but it's very choppy right now. So I've just really been focusing on the indices. Let me go back to the charts and see if anybody's on here. I don't think anybody's on, but cool. If we look at NASDAQ, again, NASDAQ is one of those cases where the market has just been really volatile. I've pretty much had, like, in the last few months of trading, I've had like 170-ish% return on my charts, on my trading. I've been able to take a $10,000 account. So I think something around $36,000 ish. I think it's something around there. So the markets have been really good, right? And so again, I want to keep growing that account and keep moving it and really just kind of maximize what I can do. And it does feel good. Like, I always will say, like, prop firms are amazing. I mean, they are amazing for stacking your capital. The rules are so stacked against you, But if you can find a way to trade through the rules, I mean, there's nothing better than having a prop firm account. But for the most people, like to have that instant gratification of being able to pull, take have a win and being able to pull that in your account. I mean, that there's nothing that really beats um, having a personal account, a live account. And so my strategy the last few months has really just been like really to try and center myself and have more of that instant gratification that I feel like I was lacking with the prop firms. It's like when I win a trade, withdraw it, it's in my bank account the next day, and it's like I'm actually this is an actual job for me, right? And so it's been really really good to have that feeling. But I would suggest that if you, for most people, maybe prop firms are the easiest way to learn. But having a 10, 20, 30, $40,000 account, if your risk parameters are set correctly, it's probably a better day-to-day thing than that. So than props. But again, everybody's different. Everybody's different temperament. If you want to be able to extract the most money from trading it like within a year's period, I mean, you're gonna have prop firms. So um, for me, I think it's just the ability to build an account, and is something I'm really going through right now. But as of right now, I think there's so many opportunities to be a successful day trader and routes you can take. And I think once you have that, like, when you figure out what you're good at, your strategy, and there's nothing. I mean, there's so many options for you. Let's go to back to dollar on Nasdaq, or let's go to Nasdaq. Again, looking at the monthly time frame, you can see here that we did trade into this overall fair value gap. We pretty much are down 3,000 points from the high. Again, we know what the point of Nasdaq is. We know that there's an investment vehicle um, purpose to this, and so it's supposed to go up over time. We are very, very bullish though. And the thing about this is that people expect price to revert to some level of the mean, and it is supposed to, right? But it's also supposed to go higher over time, right? And so this is why people say passively invest in the market, because it will pay you over time, right? Slowly. So it's hard to say like, oh, when is this market going to retrace and when is this going to have a bearish retracement? And more importantly, I'm just kind of taking the trades day by day instead of trying to like predict the long-term view of this thing. And so usually 4 hour down are kind of like my bread and butter right now, and it's just understanding where we're at. And if there's a daily level that the market's trading to, understanding that. So knowing that, like, we're trading, if we go to the daily time frame, you can see we've been on a little bit of retracement here. We came through, took this level of sell side. Actually, I'm gonna start on the monthly time frame. I'm gonna go to the 12-month time frame and just kind of figure out where we're at in the year. So again, extremely bullish. We've had months and months and months of bullishness. If we break this down to the quarter, so the 3-month, you can see again there is a retracement back into potentially an order block that we might see there. If you go to the monthly time frame, again, nothing too crazy different than what we've seen. We traded into an old fair value gap. We took out the low of last month. Do we keep running lower? Take out the low of this month, right? We don't know yet, right? So going to the 4 hour time frame. I'm sorry, let's go to the weekly. I'm just doing a top-down breakdown just to kind of see if there's anything I see potentially. Look at the weekly time frame. This is probably going to be the most important. If you had to ask yourself where we could potentially go based on this, well, what happened? We had a little bit of consolidation. We ran low and took this low, right? Traded back into an old fair value gap here. There's actually a series of them. You can see we pretty much respected consequent encroachment of this gap. And if we're being really technical, there's a couple other ones here that potentially the market could run into, right? So I'm looking at all these things, but really paying a lot of attention to this close one. And so when the week closes like this, I mean, like, this lets us know that where, smart money might be heading. And so what I'm really thinking about for this next week is there's a couple levels here. I'm gonna have them marked out just so I am aware of them coming into the week. The first one is consequent encroachment of this week, Again, I want to see if the market can get below that level. If it is, then there's a likelihood that we might take the low again. Then I want to mark the low end of this wick as I'm just gonna say previous week's low SSL, right? And so that way I know when we're on the lower time frames that where we're running into, and I'm not just trading for the sake of trading, right? And obviously the fair value gaps and all stuff like that. So my thesis and my theory is we've respected consequent encroachment of this weekly gap, right? We took out sell side here, which was this old low. So we could see the market come out and run lower, right? And as we're holding these levels, I want to go to my lower time frames and see if there's anything here that the market may potentially run into. Right. And so I'm going to go back and make these levels visible. 60. So as I go to the daily time frame, oh, did I not? Thanks. Give me 1 second. Should be visible on the daily. It should also be visible on the daily. So now my whole point is like, if I go to the 4-hour time frame and there's something that correlates with that, it lets me know that there's, another reason why the market might reject from that level. And so here, again, with this weekly gap here, I'm just going to label this weekly fair value gap. Label this to the right, just so I'm always aware. So let's see. And then I'm going to have this on the daily. This is going to be our 4-hour fair value gap. It's been a while since I've loaded all these out in the charts. And then this is our sell side liquidity with that old weekly low. So I'm really looking to see how we retest these levels here. We did turn around and break structure. And the more I look at this, like on the bigger time frames, the more I'm kind of realizing that this might turn and actually be bullish. I was leaning bearish coming into the day and coming into the week, but I could definitely see a world where we come down here again, trap sellers, and then turn around and take this thing bullish again, especially looking at like this bigger time frame view. Right. And we see that the market is respecting this level currently, but seeing if at the weekly level, I'll zoom out, that we wicked all the way below that low, traded back down to these levels. To me, this signifies trapped sellers, right? And sell side liquidity that we picked up to distribute to the buyers. So where's our weekly buyers at? Well, they're going to be above last week's high. right? They're going to be above these levels here. Right. And so what I would love to see is, and then also last week's or this current week, which is going to be last week in about a couple of hours, this week's high, right? So now I'm asking myself, okay, where I know where the sellers are at. I know what we just picked up on a weekly. I know where the buyers are at. What are we going to do with this? And so, um, so ideally, that's what I would love to see happen. So maybe potentially run lower. And again, the higher time frame that I look at this, the more bullish this becomes to me. So would love to see us start out, especially since this is going to be the beginning of a new week. You think into the monthly power of 3 as well. Love for us to come out here, run the week out, starting like that, and then potentially start to run higher. So ideally, that's kind of what I'm thinking for the week. Um, it's been a while since I've looked at the higher time frames for a bias, but just because everything has been so quick and so so you know uh, very lower time frame focus, but and very based on the daily power of 3. But I think makes a lot of sense. Been looking at where we're at right now, so as long as we stay above these levels, then we respect these old consequent encroachment levels and these levels here, then I think there's a really good chance that we could come out, start the week here, maybe even retest consequent encroachment of that wick, and then start to run higher for the rest of the week or the rest of the month. There also is obviously a chance, if we take out this low, then we could keep running lower. So it's it's there's a lot here. So let me go to ES. Probably the same thing we're looking at ES here. Get rid of all of this and then start with the monthly. Again, it's been a long time since I've done a fresh set of just ripping everything off the charts and starting over again. Looking at the monthly time frame again, same idea here, right? We didn't even take the fair value gap on this. If you look at this in NQ, a little bit of divergence here because we took out last week's monthly low, traded back into that range. If I clear this off for a second, you can see this. We traded back into that gap. We didn't even make it that low on ES. So that's divergence a little bit. That's letting us know the market probably could run higher still. Or it's setting us up for it to run lower. So look at ES really quickly. Yeah, I mean, based on this, I mean, the market not taking its low here, but then taking the low on ES lets me know that the market potentially we could run higher. So looking at ES here, again, there's a monthly fair value gap that we're trading into potentially. But if we're sticking with this idea of bullishness, which lines up with, a lot of things, lines up with the dollar bearishness that we're seeing. We're seeing a couple things here, right? So this consolidation, this wedge right here, did not take that low. This must have been June's low that I was just referencing. So we have that, and then we have NQ, which was that, right? That's that June low. So this screams to me that we're probably going to be bullish. So that could be really good. If I look at ES again, I go to the daily time frame. We did take out the Friday's candle did take out Thursday's high, closed above it, and Wednesday, pretty much the weekly high, I think, at this point. Yeah. So if it was me and I'm looking at this, I'm seeing a couple of things, and I'm seeing these relative equal highs here. Right. There's just like one of the biggest lessons that I learned is that like smooth edges usually become rough. And what I mean by that is anytime you can draw a line right there and say smooth edges, there's probably some liquidity. And we know since this is the all-time high, we definitely know there's liquidity there. But there's probably some liquidity that's sitting above that we can measure. So that's kind of one of the thought processes that I have here. So we didn't take this low, right? And I'm just going to say SMT with NQ, right? So if you put these side by side, you'll see that the NQ didn't take that low. And then if we go to the 4-hour time frame here, you can see that same idea. We did technically break structure. We swept an old low, series of lows in June, just not quite low as those lows. And you can see here that right, you can see those lows taken. So when we're looking at what we could potentially take going into the next week, again, same thing here that we were looking at on NASDAQ. There's a 4-hour gap here. I'm just going to label this 4-hour fair value gap. And when I'm labeling these things, I'm not going to long these just based on the fact that we went there. I need to see these line up with our intraday power of 3, right? So if I'm bullish for the week, I need to see some running of the Asian sessions, running of old lows, and then taking the highs. So I'm not just blindly taking these off of the higher time frame levels because they're too big. So really interested to see, again, what's going to happen here with NASDAQ. To me, us not taking that low and just taking that low means that we're probably going to at least head back towards the highs, my guess. Go to the 15-minute time frame. It's a little bit choppier. 4-hour time frame. So yeah, that's what I'm looking at on YM or on ES. YM is just chop, which means, and again, which means you either have to go up a time frame or you have to go to the higher or down time frames to see something that's clear. If you look at the monthly, again, we closed. We didn't even take. There was no fair value gap to trade into. If you look at the weekly time frame, again, last week, this paints a totally bullish picture of what's going on here. We ran and took out all of the lows, traded back into this old imbalance, took out the lows from pretty much the entire month of June, grabbing that liquidity and then running higher. So I'm not betting against bullishness here. There needs to be some very strong break that lets us know. And I mean, this could break structure and go lower, but I mean, as of right now, it hasn't fully broken back up into the structure that I would say it's 100% bullish. It is very choppy, but just the rejections from here, us coming down here, taking the lows of these old June lows, trading back into that imbalance again. I'm cool with this being bullish, but it's also probably the third clearest chart to me out of NQ, ES, and so I think YM is the weakest here, and then I would be looking at NQ and ES first. I like NQ because it swept its level already. I like ES because it failed to sweep, so it's showing us that there is potentially no liquidity down here for it to grab, and it's more likely that it's going to run up. So that's really where I'm going to be focused this week. And I mean, even looking at where we're at to the old highs, I mean, I'm looking at the first level that we can see here is Friday's high. I mean, from where we're currently opening up at, that's 500 points, right? The next one is another 700 points. The 30,000 is it's 500 points. So all the major highs are about 500 points apart, which is really good for the opportunity for us to be able to take, huge momentums and huge swings. So what I really want to see again coming up into this week, I want us to get, again, when I start thinking about how can we trap traders, how can we grab liquidity, right? We know it's a new month. I want us to start off by coming up, grabbing some sell side in this old gap right here, maybe even potentially as low as the lows, and then turn around, respect those higher time frame levels, and then start running higher. So that's ideally what I'd like to see based on this. And we We just won't, obviously know for certain until the market opens up. So again, power three is your best friend because this is just a higher time frame layer, right? You need to see these charts and these trades play out, matching it up with our accumulation, manipulation, distribution, right? And so that's the biggest thing for me is I need to see some level of liquidity grabbed. So I think that's all I'm going to really focus on for this week. But yeah, I mean, hopefully everybody had a great trading week. If you guys have questions, hit me in the chat, and yeah, we'll be ready for this upcoming week. Peace.